Another stupendous session for the Indian markets. Let's tell you all the special guests who will be joining us on the show. Vikas Khemani from Edelweiss Securities. Apart from that, Sandeep Wagle as usual on the charts. And to discuss the fundamentals of the markets and specific stocks, we have Varun Goyal joining in from Karvy Private Wealth. Varun, I'll come to you first. Fundamentally, how are you looking at the valuations, and is it the liquidity which continues to take the markets higher? And also, how much of the part is being played by earnings, especially the large cap earnings by now more or less on the higher side?
Well, I think the valuations still continue to be reasonable. We are trading around 14 to 15 times 1 year forward PE multiple, which is not expensive by any historical standards. The global liquidity, of course, continues to be extremely strong, and we have seen a lot of foreign inflows continue to happen during the course of this year. I think as far as the macros is concerned, considering the sharp cool-off in commodity prices, we are beginning to get more and more comfortable as far as the fiscal account and the current account situation is concerned. So we believe that macros are definitely on the mend, to the exception of political instability and what will happen on that side. I think all other macro parameters, be it inflation, current account deficit, fiscal account deficit, even growth, would start looking a lot better than what it was last year. So definitely we are on a kind of improving trend from a macro perspective. Valuations are also supportive. However, we would not really get carried away, and we would still be selective in terms of what stocks we buy. Whatever results we have seen so far have been good, especially on the private sector banking space, consumer and healthcare space. The cyclical part of the market, which is infrastructure, metals, we are still bearish on them, and we don't really expect a very good set of numbers from those sectors.
Vikas, wanted to get in your opinion at the markets at this point in time, given the stellar run-up that we've seen. It's not really backed by convincing fundamentals. There continue to remain concerns, there's challenges. If you were to balance between risk versus opportunity, would you say you're bullish or bearish?
That really depends on the time frame you have, according to me. If you have, let us say, over 2 year kind of time frame, I have no doubt in my mind that, markets will do well, markets will deliver good returns. But I think given an event ahead of you, if you have a short time horizon, there are possibilities that markets might correct should the event not pan out that way. So broadly, things are looking all right, given the fact that, your interest rates are picked out, inflations are picked out, current account deficit is falling into place, commodities prices are coming down. So I think all those things are auguring very well as far as the economic factors are concerned for the markets. Political uncertainty is a very big event for us, and it has a very binary implication. So if you have an event which has very binary implication, predicting that and having implication of that is very difficult. So hence I said that I think if you take a slightly longer term point of view, you can live with the short term downside. But if you have a shorter term 3 to 6 month kind of horizon, market will be very uncertain and volatile according to me. So I think one has to live with that volatility. Otherwise, I think macro broad level are falling into place.
Sandeep, Nifty, how do you think one should play it? Because declines are getting bought into, and we've already spoken earlier also, around 6,000, between 6,000 and 6,050, there seem to be a lot of participation suddenly emerging. Options data is telling us that. How are you reading it on the charts?
Absolutely, Ajay. I think 5980 has become a very strong support, and that a little below that can be a good stop loss. Nearer 6,000 can be a good buying area. I don't see the Nifty at any point of time falling more than 1% or so, which is 50-60 points, and that should be bought into. I would buy into that area and keep a stop loss of 5980 to 5950. And very clearly, I think 6150 is on the cards, and in case that is taken out, the next target is 6210. And talk of the next month or two, don't be surprised if the all-time high of 6300, 6330 is tested. I don't want to say that it will be taken out immediately. That will take some time. The Nifty will spend some time between 6,000 and 6,300, and that could be possibly a few months or possibly a few quarters before the breakout happens. So view is definitely positive. Every short to medium term is positive, long term is also positive. And I think 59.50, we will not see lower levels than that.
Varun, wanted your opinion on HDFC, because it was clearly a great set of numbers this time around, profits up by 17%. We spoke to the management also, who believe that this kind of a growth trajectory is likely to extrapolate into the coming quarters as well. Would you be bullish on the counter at these levels?
Well, I think housing finance companies have done quite well this quarter. Whatever results we have seen so far, we have seen a very good set of NII growth. We have seen a very good set of profit numbers coming in, and I believe that trajectory should continue for the rest of the year also.
Vikas, what about your sectoral plays, especially the high beta cyclical names, even for that matter the infra area or realty? Do you think they are coming back in focus now?
I think interest rate sensitives are definitely likely to do well, because we have had a couple of rate cuts, and I think some more might come through, and I think we feel that probably another 50 basis points is in offing over next in this financial year. So I think that will only help the interest rate sensitive, and I think we feel banking, automobile, real estate, I think interest rate sensitive sectors do well. As far as the infrastructure, which is also interest rate sensitive, is concerned, I think the policy overhang continues. So till the time we see, at the margin stocks might do well, but I think till the time we see sort of policy things getting resolved in each of them, and each of them have a peculiar situation, I don't think you will see a re-rating kind of a situation coming through. They might do market returns or a little better than market returns, being the interest rate sensitive nature, but I don't think you will see a re-rating happening in those names in a hurry. So most people would like to play, I think, safer interest rate sensitive, such as banking sector, better names in real estate, automobiles, I think, and which is what you probably sort of see.
Let's focus on one sector which was doing pretty well in trade today, the media stocks. Though the market cap of the entire media sector in the listed space is relatively just about $1.5 billion, the stocks are very high beta. When they are doing well, they're actually flying. So look at that 5% up move in Z. A lot of other stocks also have been doing well ahead of the numbers, 2 to 3 days ahead of the numbers. Dish TV is also flying around 2.5–3%. So it was almost like a secular move being seen in some of these media stocks. Varun, do you look at this space? Because they seem to be running in from the entire mid-cap area. Valuations continue to remain on the lower side. What's your call?
Well, I think as far as the media space is concerned, I still don't see how the macros can justify the valuations. There was a lot of talk about the new regulations which came into place a few months back, and how that will change the whole access system, that the cable access system that this country has been using. Unfortunately, I think the revenue and the profitability side will take some time to improve. I know both the broadcasting space and the print media space has been under a lot of stress. Advertising growth is just not happening. Although it is true that subscriber growth numbers should happen and the subscription fee should improve, but I think till the time we see a significant revival in advertising, media sector, from a fundamental perspective, will not do very well.
Sandeep, what would be your opinion on the pharmaceutical names that put out their numbers today? You had Ranbaxy a bit disappointing. Lupin, though, came in above what we were expecting. On the charts, what's the reading?
Well, Ranbaxy has obviously been disappointing, and the chart also doesn't suggest any buying at lower levels. I would say avoid Ranbaxy if you have a short term in mind. Long term, possibly yes. At lower levels, it can be bought around 400, 410, that level. Lupin, I don't want to buy for the simple reason that it is already moved up, and most of the move has been captured in this whatever has come out. So yes, if you have a target of 1 year plus, then we can talk of a target beyond 800 or so. So the right level to buy Lupin, according to me, is around 700 to 680 in case that comes in. Can't say whether it will come in and when it will come in, but I would wait for that correction. I am not in a hurry to buy, because 680 we had a buy with a target of 740 which has been met, and we have booked out at this level.
Varun, out of this entire consumption space, Jubilant Asian or the auto ancillary stocks or some of the PSU stocks which will yet to come out with numbers, what are you looking at as a theme?
Well, I think I'm definitely positive on some of the mid-cap FMCG companies. We have seen a very good volume growth, 10% plus kind of volume growth from some of these mid-cap FMCG companies, especially the ones that cater to the consumer staples space and have a good presence in the rural areas. Also, what we have this quarter is the significant benefit of commodity price cool-off, which is showing in their EBITDA margins. So we have companies which use either crude or crude derivative as a key raw material. They are clearly showing signs of cool-off in raw material prices, which should continue to add to their bottom lines in the next few quarters. So that is one space which clearly stands out. As far as auto ancillary is concerned, I think despite the fact that we have seen a sluggish growth as far as two-wheeler and four-wheeler sales are concerned, because there is a very sharp replacement demand, because the auto cycle has been pretty robust for the last 4 or 5 years, I think auto ancillary companies, especially the ones that are in the tire space, are doing well. The ones that are in auto component space are expected to do well, and they again would reap the benefit of commodity price cool off. So I think commodity price cool off is to some extent compensating for the slowdown in volume growth, and that should lead to 15 to 20% kind of profitability for most of these companies.
Vikas, at the current juncture, how are you strategically allocating to maximize returns? Do you think buying some banks, would you argue that it's a crowded trade, defensives are expensive, and it's too early to buy industrials? So what would be the options left?
And I do believe that all the money managers managing money in this country and outside are smart. So I think everybody is smart, and despite all the smartness, I think people are struggling, because I think it has been very difficult to take big call on the market at this point. I mean, has been in the recent past. But having said that, I feel that I think given the fact that my conviction is broadly around, given the fact that macro indicators are I said, inflation is peaked out, reducing, commodity prices are coming down, interest rates are coming down. So I think broadly these set good context for the interest rate sensitive sectors and stocks. So I would still be comfortable putting taking more bets on the banking sector, where I think fortunately, despite everybody's expectations so far, whatever results have come out in the banking sector, on the asset quality side we have not seen any disappointment. Margins have kind of done well. So at least on the private sector, I think post this quarterly numbers, confidence seems to have risen, and I guess this will continue to do well at least till the time next quarterly number comes, and I think we'll have to again reevaluate that. It has become a quarter to quarter story. So I think my confidence on the banking sector, wherever the quality of the earnings have been high, I think will be there, and I think investors will continue to put money. And in case like Mahindra and Mahindra Financial Services is a reconfirmation of the fact that stock which has done well, result delivered well, I think markets have cheered that, and I think stocks have done very well post results. So I think similar kind of situation will continue to happen. Investors will put more money where companies are delivering the returns. Having said that, one has to live with the macro event or one big political ahead of that. I don't think we can do anything about that right now. So I would say that banking, auto, real estate, some of the select infra names where uncertainties are lower, I think will continue to do well.
Let's get you some stocks to keep on your radar and what the dealing rooms are talking about. Gargi is here with the list. Gargi.
Well, the first one is Magma Fincorp, dealers indicating that one should accumulate this counter. In fact, the earnings for the fourth quarter are expected to be pretty strong. We are hearing a number of almost 45 crore rupees on the net profit level. Also, we are hearing that the growth that we'll see in the small ticket loan, that is going to be tremendous and probably taking, the revenue growth higher this time around. If you look at the stock, it was more or less under pressure in today's session, 1.7% decline that we saw on the counter today. However, dealers expecting a good run up tomorrow post the results coming out, and that stock was, in pressure in today's session, but still a buy coming in on that front. Also take a look at Sesa-Goa, and post-market there has been a judgment from the Supreme Court in terms of the mining ban that is affected in Goa. They have adjourned the hearing up till July. So remember that till July, Sesa-Goa will not have any access to the mines in Goa. Also the important part being the inventories that the company had in Goa, for which there was a ban on transportation. That too hasn't been resolved, but in 2 weeks time we are expecting that there probably will be some judgment coming in from the authorities in terms of the mobilization of the inventories for Sesa-Goa. But for now, Goa remains banned, and that is going to be a bad repercussion coming in for Sesa-Goa for the June quarter, where 14 million tons of the Goa production will not be present, and probably on the back of that we may see some reaction coming in on that counter too.
All right, Gargi, thanks a lot for joining us on the show. Let's get you some trading strategies then. Vikas, what about you? What are the specific ideas you are looking at which could turn out to be multi-baggers in the next 2 to 3 years?
So I think, in my opinion, in 3 years, 2x, 3x will largely, in my opinion, come out from the mid-market space. From large market space, I don't think we will see many multi-baggers sort of idea. But I would say rather than multi-baggers, I would keep my sort of ideas restricted to the who can outperform well in the market. And I think Reliance Industries, we have said, and we have a sort of a Brevard series also, I think will do well in next 2 to 3 years time. I think stock has consolidated, looks sort of cheap, and I think margins have been improving. So I think that stock we believe will do very well. Media sector we like a lot, where I think Zee Telefilms have been doing well, and I think within that sector I think you will see stocks doing very, very well. Banking undoubtedly I think is a great sector where you will see returns coming out very well. I think ING Vysya, ICICI Bank, I think these are the names which are, I think, sort of well poised, and I think they will definitely do well. I mean, ING Vysya, according to me, is a stock which, can give you superior return because it's undervalued. Management has delivered quarter after quarter on all parameters. I think market is taking note of, those things. So it can get re-rated along with growth. So I think this stock can give a very, very good return. So in my opinion, these are the sectors you should look at. Within real estate, I think, in my opinion, 1 or 2 stocks will come out where I think because that sector has been ignored and for long, and I think their quality stocks will, in my opinion, do well. So these are the probably 3-4 stocks I would sort of sectors I would stick from 3 to 4 years perspective.
Okay, that's quite a few names coming in. But Varun, if you were to park your money on 1 or 2 sectoral themes that you can guarantee would give strong returns in the long term, which ones would they be?
Well, our top sectoral pick, for now, and it has been for the last 3 months, is pharmaceutical space. There is a very, very strong domestic formulations growth of around 15%. And add to that the big generic opportunity in US and other developed markets, and the space becomes extremely interesting. So we've seen a lot of Indian companies making aggressive inroads in the US market. We have contract research and manufacturing companies which are doing extremely well. This is one sector which will definitely deliver 15 to 20% kind of earnings growth, and we would see very healthy return on equity, lower leverage in these companies, and these are mostly companies which have good corporate governance also. So this is one sector that we would think makes a very, very strong case for long-term investments.
Sandeep, what about you? Your call on specific large caps of buying on decline has been going on well. What are the new strategies which you have put on your radar now?
HDFC has given a very clear breakout, Ajay, today. In spite of it having gone up, if we had a buy at lower levels today, in spite of that, I would say that it is still a good buy and little bit of a decline. So I would buy it with a stop loss of 870, target of 921. This is for the next couple of trading sessions. The second call is a buy in Dish TV, stop loss of 67.50, target 73. It is threatening to break out, and I think that breakout should come in tomorrow. And the third one, in case somebody wants a hedge call, that would be a sell in Apollo Tyres, stop loss of 100, target of 93.
Okay, so hope you got your fill of individual stocks and sectors. Thanks very much, gentlemen, for joining in on the show and giving us all of your market opinion.